Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, we have a number of listener questions this week. The first one, a listener asked what amount of their monthly income should be devoted to their home. Another asked if 30% of their income going to housing was reasonable. Your thoughts?
My thoughts. This is really a personal answer for each family that is considering the question, and I really it's one of my pet peeves about the entire real estate sales industry and the infrastructure that's been built up to guide Canadians into making this decision. Each person is different. So when the question comes from one family, is 30% of my income going to housing reasonable? The answer may be yes, true. That's reasonable for your family. At the same time, another family, we could say there's situations where 55% of your income going towards home ownership is a reasonable amount. And I know your listeners are saying, what the heck is this guy talking about? 50% of your income. Well, there are so many myths that are contained in the stats that are released and the sales pitch that realtors, the banks, housing analysts, mortgage brokers, all of these people have perpetuated for so long. As a matter of fact, Jim, there's a correlation, or I guess there's a correlation now. It's not a causation, but there's a correlation between housing market, housing ownership, and your health. Your health. Earlier today, I was looking through some information in preparation for today's show, and it's got to the outcome here is a little bit of my own personal experience. So that's what I'm talking about. Over the last couple of months, I've been studying, my own health, the way I've been eating, and how can I extend the longevity of my life. I mean, this conversation began by working with healthcare professionals who are claiming now that they expect to live beyond 100 and live healthily then. And I'm listening to a well-revered doctor from Toronto who is explaining how we have been misled about health. And I'm going to use that comparison here to answer this question. When I started selling real estate as a sales career, I was told that buyers should really not be spending more than 30 to 32% of their income on their home. Now, that number only was recording mortgage interest, property taxes, heat. That's basically all that it reported. So it left out electricity, it left out water surcharges, it left out repairs and maintenance on the home. It often left out over 50% of what the cost was of owning a home. But that was predicated on a false statement, on a false belief. I want the listeners to think about something here. And I want you to answer as a listener if this would be an absurd comment for me to make today. I am going to recommend that you eat 11 servings of red cereal, rice, and pasta each and every day. I'm going to recommend that you eat 4 servings of fruit, 5 servings of vegetables, 3 servings of milk, yogurt, or cheese, 3 servings of meat, poultry, fish, beans, and eggs. And I'm going to instruct you to use fats and oils sparingly. Now, if we look at the context of where we are, that was the food pyramid that every single human being in North America was told to follow starting in 1992. That was the food pyramid that I applied to my own children as they grew up. When we look at the data today that's been added up over the last 10 years about health, that food pyramid is almost backwards the way that the human body works. Yet everybody believed it. If you were to say to people, eat 11 servings of carbohydrates a day today, you would be laughed out of the room. Yet that was a fact of life for every single human being in North America. We were given the advice that this was true. This was the way to be healthy. This was the way to cure your problems. As it turns out, it's probably the primary cause why as a society, we have a problem with diabetes today. It's why our society is so overweight in most cases. Because the information we were given on the most important aspect of our life, meaning our health, what you have to eat to have a healthy life, was wrong. Every single university in the nation supported this. Every politician supported this. And look where we are with our health today. We have a generation that are now experiencing a diabetes like never before. In homeownership, it's the exact same way. When we look at homeownership, we look at debt. And when we're talking about ownership debt, we're talking about it a totally different way than what everybody else is. When the world economists complain about Canada's household debt to income ratio, it's no different than when they gave us the advice to follow the food pyramid, telling us to eat up to 11 servings of carbohydrates every single day. It is absurd that they measure our debt as a nation and as homeowners the way that they do today. So let me explain why. The pyramid also works in home ownership in the housing market. But the pyramid really is just the opposite, upside down. It's really just the opposite of what you've learned. If you are taking out a mortgage, and for every dollar you pay, 5 cents goes into your pocket, and 95 cents goes to the bank's pocket, that's a pretty tough life. But if you do it another way, where 50 cents goes in your pocket, and only 50 cents goes to the bank, you are 10 times ahead of what you would have been only putting 5 cents in your pocket. Now, if Canadians are paying down their mortgage debt, each personally, 10 times more quickly than they were doing when Canada's food pyramid was released, obviously you should not be measuring debt to income or debt to GDP on the exact same chart that you were in 1990. It is a totally different measurement. You would need to look at it from a totally different perspective. Yes, your mortgage may be triple what it was in 1990, but you're paying it down at 10 times the speed. So in theory, homeownership math would have said, technically, you can carry a mortgage 10 times as big as you did in 1990, and you would be equal to what you were in 1990. When you step back and you look at the data, it is a shocking thing, Jim. It is a shocking thing. And it's no more shocking than I'm sitting here discussing this with you today with the 1992 food pyramid sitting here on the screen of my computer. It's telling me, as my children were born, that I was to give them 11 servings of bread, cereal, rice, and pasta a day, up to. I was to give them 2 to 3 servings of milk, yogurt, or cheese. I was to give them 2 to 4 servings of fruit and 3 to 5 servings of vegetables, and only 1 to 2 servings of meat, poultry, and fish. Nobody told me that if I was to fast for 1 day a week, that I would be healthier, that my body would accommodate, my body would work in the way it was designed to work. But then when I sit there and I think about it, well, let's see. We supposedly evolved from the caveman. We all pretty much agree with that. I know there may be some listeners that disagree a little bit, but just bear with me with this. We would only eat one day, maybe every 3 or 4 days. Our bodies are designed to live that way. Yet, because big food, big pharma, and I guess politicians wanted to sell us on the idea that we should be eating Cocoa Crisps in the morning, that I should be feeding my kids Captain Crunch, that I should be eating bread with every single meal, that I should be eating pasta every single day. They had something to gain with the message they were sending me, and it was overwhelming. It was complete. These couples that are asking these questions, Ross, what percentage of my income should I spend? Well, you want to know something? There are young couples out there who are moving to communities where we've discussed in the show before, Jim, at minimum wage, you get a free home. Okay, at minimum wage, you get a $180,000 house, which in a lot of Canada, even in Ontario, is very easy to get a hold of. You've got to move out of the GTA, but you can do so. The government will give you, if you have 2 kids, $12,000 a year if the husband and wife both make minimum wage. Okay, so if the government gives you $12,000 a year for the child tax benefit, and you don't pay virtually any income tax, if you spent $25,000 a year on your house, including mortgage, property taxes, heat hydro, cable television, maintenance, repair, renovation on your home, you still aren't really spending 50% of your income in your home because the government's giving you $12,000 a year. So you have money available to take your kids to a soccer lesson. You have money left over to be at your kids' sporting events. You have money left over where you can go and take care of your mother or father if they're sick and they need your help. So the question really has to be, how much of my spendable income should I be spending on my home each month? And that, my friends, is the same discussion that we are having now about what we should be eating, putting in our bodies each and every day. Because the discussion today is nothing like it was in 1992. It is nothing.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Welcome back. We're speaking with Ross Kay. Ross, an investor sent a question to us asking if they should insist on their tenants having insurance, and if they go the Airbnb route, how are they insured against damages like those we've seen in the news the past few weeks?
Well, that's a good question, yeah. So, tenant insurance, yes. Your tenants should have contents insurance. So the insurance they get is for the contents that they bring into the rental. I will also tell you that most mortgages that are in place for a landlord have that as a contingency. They want to know that your tenants have purchased contents insurance. They do that so they don't have to, if something ever happened, the insurance company isn't worried about being sued and having to deal with it. They want that insurance to be in place. That said, they also want to make money from selling more insurance, as any insurance agent does. They just want to keep adding more and more. I'm not saying it's wrong. I'm just saying this is the reality of being a landlord and a tenant. In terms of the Airbnb situation, I understand that it was brought to my attention, actually, a couple months ago about how there's these new investment strategies being sold primarily in the United States, where people go to a landlord and they tell the landlord that they will rent the property from them, but they're going to rent it out as an Airbnb. They'll guarantee the landlord gets a higher rent that he would have got or she would have got with a regular rental, they claim. And they also say they'll take care of the property, they'll clean it, they'll do all the work. So this is probably where this Airbnb discussion is coming, because these things are taking a lot of activity from on YouTube. And this brings up to the discussion with an Airbnb what kind of insurance you need to have. So the very first insurance I'll tell you with an Airbnb is the data from across Canada that has been released recently shows you that you do not profit from an Airbnb in a greater manner than you do as a regular yearly tenancy. It does not happen. The odds on you succeeding are so low versus the odds of you succeeding so much with a regular tenancy. It just is bad investment advice for anyone to give it. You can probably not get enough proper insurance on your property to offset the risk that you're going to entertain for it via Airbnb. As people noticed, like the question came, was in the news, where somebody rented an Airbnb, had a bunch of people in, they had a party, there was tens of thousands of dollars worth of damage done, and now the insurance company, you can be sure, is going to be fighting against that. When had they just simply gone ahead and invested that money somewhere else, they didn't want to be a regular landlord. They only had to invest the money somewhere else. They could have bought a REIT. They could have bought bank stocks, collected the dividends, as we've talked about in the show before. In terms of the Airbnb discussion, you need to have a great relationship with your insurance agent. You need to have a full understanding of the policy that they give you. You need to be told all of the outs the insurance company has. Because if something happens, the insurance company is going to look to use those loopholes. So, yes, always insist that your tenant has tenant insurance. That is just a good landlording policy. That is just a way to reduce your risk and for you to be able to live life as a landlord more easily. And if you're going to go the Airbnb route, understand, A, the odds of you making more money doing Airbnb versus a long-term rental are next to nil. Regardless what anyone says, the data is now out and it's available. You can find it yourself if you go look for it. It's out there. Always have a great relationship with your insurance agent, your insurance broker, and make sure that you have a full understanding of the policies you're paying to receive.
We'll have more with Ross Kay right after this.
Cyprus Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, you've now claimed on the show that house prices have fallen for a couple of years in most of Canada. Are we getting close to the point when home buyers should get back into the market again?
It's a popular question lately, Jim, and I think it's being perpetuated by the myths that are out there from economists. First about the stabilizing housing market, and then about rebounds. This goes back to our first discussion in today's show about the falsehoods that the public is told and that we believe. So, you haven't read anywhere in Canada that housing affordability has undergone great strides of improving nationwide over the last 2 to 3 years. You will not look out there and find a report publicly available which claims or states, using data, that housing affordability has gotten better, that families are paying less and less to buy the homes that they're buying. You simply won't find that out there in print. And the flip side, which you will probably find, is that out east, PEI or Montreal, that affordability is getting worse. And these are simply not data-driven responses to how families interact with their homes and the housing market. So when we're looking at affordability, because I really believe this is a more important response to the question that was asked. Housing affordability, homeownership affordability, has improved nationwide. Rents, real rents, the rents that are being paid for an identical property this year versus last year on an inflation-adjusted basis are lower. Now, this is not universal, but the vast majority of properties are this way. The confusion that takes place is because they're not calculating these things properly. When we're looking at home ownership and we see a $30,000 drop in the average selling price in a province, it's not just that the home is $30,000 cheaper this year. We have to also take into consideration the amount of mortgage debt that is reduced and the interest rate declines that mortgage debt is causing. Or the interest rate declines, the payment reduction, those interest rate drops are resulting in. I mean, when we're doing calculations right now, from peak to trough in the affordability calculation for the province of Ontario, there are families out there buying in Ontario today that are paying $800 less a month in 2019 that they would have paid in 2017. There are buyers of single detached homes in the Greater Toronto area who are paying almost $1,600 a month less to buy a house this year than to buy the identical home 2 years ago. In Vancouver, single detached home buyers are literally paying about 40% of what they would have had to pay each month back in the spring of 2016. Condominium buyers in Vancouver itself are paying approximately $450 less this year per month to own an identical condominium than they would have been spending last year. The calculations, the things that you hear about the housing market are simply wrong. They're simply absurd. They're rooted in myths, because these myths were created by the stakeholders to generate incomes, revenues, profit for their own businesses. In the same way that big food did it to convince you to eat 11 servings of fruit and of carbohydrates a day. In the same way that big pharma convinced people to use opioids in the manner that they've progressed to now. All of these things have been driven by the greed of those who've been tasked with overseeing the most crucial parts of our life: health and wealth. When a Canadian bank uses an economist, their bank economist, to go out there and sell a message that generates profits for that bank, which these economists do every single time you see them on television, or hear them in the news, or hear them on the radio, or see them in the news. It is an outright lie to the Canadian public. And Canadians have to get a grip on this. Because if you continue to listen to these misdirections, these falsehoods, these lies, that are designed solely for the benefit of the stakeholders, you're going to be having the same consequences 10, 20 years ago that followers of the base Canada's food pyramid from the early 1990s are now living with today. We are going to have a generation of Canadians who have listened and been corrupted by those that have been tasked and trusted to oversee home ownership, housing, affordability, and shelter. And that's what I hope everybody takes from the show today, Jim. There are data-driven answers for every single penny of house price change that has taken place in Canada from 1980 till today. Every single penny. The stakeholders who have generated the stats that you use and believe and make the largest financial investment expense of your lifetime are wrong. They're false. They're designed to create housing bubbles. The housing bubble is required for them to earn income. When a housing bubble crashes, as it is happening in Vancouver as we speak, and has been as we first started talking about on this show, and as it had the year before when we announced the housing market was slowing down, as everybody else said the housing market was getting busier, people need to stop believing this. We read today, U.S. housing market, 15 months of a decelerating housing market. It was the fall of 2015 when the American housing market peaked. Reading the data the way that we read it. If you want to believe Canada's food pyramid from 1992, if you want to believe feeding your kids 11 servings of bread every single day is a good way to raise your kids, then you should believe what you're being told by stakeholders in the real estate sales profession. Those whose incomes are tied to the buying and selling of real estate. Believe them. Believe that food pyramid. Because what I'll tell you is, in the same way that I was fooled, the same way that I was misled, the same way that I was convinced that feeding my kids in this manner was a healthy way throughout their entire lifetime till they left our house, I feel foolish today. I trusted people. I trusted the government. I trusted the doctors. I trusted the scientists. It has all been debunked. All of it. It is all false. They can give any excuse they want. The fact of the matter is, I was given wrong advice about the most important thing in my life, I guess since I was born. And it's only in the last 5 to 7 years where the data is being interpreted by non-stakeholders, doctors who have no ties to to big food, doctors that have no ties to big pharma, that we are finally seeing the true answer, the true response, the true recommendations that we should be living our lives by. Your home is just as important. You go health first, wealth second. Those are the two things that matter the most. And what we try to communicate here on the show is we're trying to give you the data and let you make the decision for yourself.
Ross, thank you so much for being on the show.
Hey, thanks for having me on today, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.